Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. It is Friday, and the market kind of pulled back a little bit today. We had a great day on Wednesday and Thursday, and then today a little bit of pullback. So let's kind of get into it. Interesting, on the slide I put up. I did take a position in a company called COTY. It is basically a beauty company. They manufacture makeup, and apparently, it looks like Kim Kardashian, who sold her line of cosmetics to this company about 3 years ago, wants to buy it back. Well, they're not all of it back. She wants to buy back 20%, but that's kind of making the stock move a little bit, and it's kind of interesting. So, without further ado, let's get into it with this stock. So basically, what's going on here is that basically Kim had a 20%, had a company that she sold to COTY about 3 years ago. She wants to buy it back, and so it does seem like, well, there's some stuff happening there that at least she wants to be part of. So here's the slide on it. Basically what happened was it moved way up, and then it pulled down, and then hopefully it bounced. I tried to buy it today, basically, and I may have bought it. I don't know if I bought it right. I bought it at about 12, at about a little bit 12 and just some change. Then it pulled down a little bit. It did close lower, but kind of interesting, kind of interesting thing when it comes to that. Basically, here's how I did it. Here was my buy, and I'm kind of trying to give you a good look see at this. There we go. All right. So basically, what happened was on the news, we shot way up, and then we pulled back, and you know, we pulled up, we pulled down. So if I get that, there we go. So there we go. We pulled down, and then my buy was right about 12.28. Now it didn't close; it closed down from that, but hopefully we'll get a bounce there. This is forming sort of a cup, and then with a sort of a really high handle and then a low handle. So hopefully we get it stops there at about the 21-day exponential moving average. That's the green line here, and we get some support there. We'll see what happens, but potentially hopefully a good move on that one today. All right, well, let's get into the kind of what happened in the market overall. The Nasdaq was down just slightly, 0.18. The S&P 500 is down about 0.10, and the Dow Jones was up today. So interest in the Dow, but not in the other two major indexes. So remember, the Dow Jones is only 30 stocks, so it's not a lot of stocks there. Most of the action, of course, in the Nasdaq, and it was down today, as well as the S&P 500. But not to fear. A Somebody that I follow here, Dan Patrick, he has a site that's quite good. It's called Stock Market Mentor, and basically he expects the S&P to move to all-time highs, and we're very close to that now. So kind of an interesting look. He expects all-time highs on the S&P. So everybody out there is doom and gloom, but that may not be the case. So he's expecting, based on the chart action, basically it going to an all-time high. So let's take a quick look at the S&P 500 ETF that I follow. It's called the Spider, and there we go. Let's jump on over to that. There, that is the Spider. That's kind of what's going on here, and it's just it's continuing to just kind of move up. And we're it does look like we may soon be back at the all-time high. That would be amazing if that indeed were the case. We'll just see kind of what transpires. But that's sort of the look in the market, and we may be headed towards an all-time high. Now I know that everybody else out there, all the prognosticators are saying, well, it's the end of the world, and we're never gonna see we're never going to see it as good again, and it's gloom and doom, and it's the end of the world. But interestingly enough, that's kind of not what Dan is saying, and not what a lot of other people are saying as well. So we may be headed towards an all-time high, and yeah, it's just kind of looking like that. It's just kind of looking like that all over again. So I do expect a continued upward trend. Now, we did have a little bit of a downtrend today. I was taking some profits, so it's not all rainbows and unicorns, but yeah. But other than that, looking pretty good. So Dan Patrick is expecting that, and I definitely tend to agree with him. Here's the stock of the day. That was Cloudflare. The symbol on it is NET. Good stock. I've traded this one before. I don't currently own it. Interestingly enough, there has been a little bit of a sell-off, a little bit of a pullback, but we do kind of expect to see a continued move higher on this one. I'm going to take a look quick at sort of where .net is. This is Cloudflare. NET is the symbol. And let's take a quick gander. There we go. Trying to bring the stock. Yeah, there we go. So, sort of what's happening here with Cloudflare, it came up to this high, this intermediate high back here in February. That was about 72, and then it's kind of moved lower and finally getting through a kind of a sort of a double bottom pattern here, and then moving close to the 21-day exponential and bouncing there. So this was the stock of the day. So kind of interesting stock. Currently, I don't own it, but the area it's in, software security, very good area. Palo Alto Networks, of course, is probably the leading stock in that particular group. Here's what I do own. I did take some profits today. Sold my Datadog and several of the other stocks, but here's sort of what I have currently. Tesla, I did add to my position in Tesla, so I do have a little bit more Tesla. It was up today about 3.48 in change, or about 1.25%. Palantir was off. Allegro Microsystems, which I did sell, they did sell late, so my slide is should not include that, but I did take profits in Allegro. I sold that. Then ANET, that's Arista Networks, Shopify down, down, COTY down, and then I did buy at the end of the day. I bought Lattice Semiconductor, LSCC, and the reason I bought it, I hope I'm right here, is I think that it's going to bounce off of that 21-day exponential moving average. So I'm going to jump on over to Lattice LSCC. Just give you a quick look at that chart. There we go. This is Lattice, and this is the number 2 in the fabless semiconductor area. There are 2 stocks that have a little bit better fundamentals than even NVIDIA. NVIDIA is really the stock to own. I don't own it. I sold it. I took some profits in it. But Lattice Semi and Rambus are doing very well. They're both in that group, and they're also very well good to take a look at. What happened here is basically as the stock moved, I basically bought it, and at these levels, and so we'll see if it holds the 21-day line, but it's coming off of kind of a cup formation, and hopefully we will see that move better. So, all right, thanks for taking the time out of your day today. Get to some of the questions. Mr. Bull, Mr. Bull, like that. Are you sure you're not Mr. Beast in disguise? I hope, I wish I had Mr. Beast as a client. But anyways, please take a look at CPA. Okay, well, let's click on over to CPA. and see what that is looking like here. Uh, and there we go. This is COPA. And COPA, it was down a little bit today, but it's number one in this group. Wanted to kind of put that out there for everyone. This is COPA. Okay, there we go. This is COPA. It's number one. So you can see there it is, number one in the group. So that's good. This is the airline group. And interestingly enough, cruising and airlines finally are starting to some nice action here. So down a little bit today at 113. Let's take a look at the kind of a more interactive chart here and see if we can see anything there. But CPA, Copa Airlines, CPA. I think they specialize in flying to like um, Costa Rica and Central America, but I think they fly other places too. And we've kind of come up through this. We're still what's good about this one, at 113, we're very close to the 21-day exponential moving average. We're about 3% above that. The 21-day exponential is at 110.09. That's typically where you want to buy something as it pulls back to about that 21-day exponential moving average. Actually, um, Mike Webster, who was formerly with IBD, he actually is in a hedge fund now, I guess. He did some studies, and that tends to be where a lot of these programmatic traders will typically buy. So if you can get it close within 5% of that 21-day exponential moving average, that's it definitely could be bought at that 21-day exponential moving average. So that's not a bad place to buy it. Let's jump on over and see. I just want to take a look at some of the ratings for this stock here. It's got a composite of 99. That's good. That makes it really in the top of all stocks. So that's really good. EPS a little bit weak, and kind of expect that with some of the airline stocks, just because, well, airlines just aren't as profitable as semiconductors, but it's a little bit of profitability issue there. Relative strength 94, that's pretty good. That means puts it in the top 6% of the group rating, and this group has been doing real well. It's A on that group rating, so pretty good there. Let's just take a look at everything else here. Earnings are up in August on August 9th. And let's see, industry group rank 20. So that's really, really good. So could we buy it at this level? I don't know. Let's see. I want to look to see kind of if there's anything that I'm not seeing here. Going back over to Copa Airlines, the 21 day is at 110.09. Currently, it's selling at 113. So we're very close to that. We're within 5%. I think you could start a position here. I definitely think you could start a position. It's not really the greatest cup with handle. I'd like to see more of a base, but it seems to be sticking right close to that. So there was a fair amount of selling today, right at the end of the session. So I would probably wait until it reverses. Currently, currently it's to say it's moving down, and it's currently moving down. So we want to kind of wait until it makes the bounce, hopefully at that 21-day line. So here's what I would do. I would probably wouldn't buy it on a regular order. I would probably do a. I would see if once it bounces, I kind of put probably at that 21-day exponential moving average. So that's kind of where I would be that's where I'd be buying it. So it's a good. That looks like good stock, and definitely something that is worthwhile. Definitely a good area for the market. All right, let's look at Google. Google, it's funny. Google, I had Google. I did sell it. Part of the reason I sold Google, to be honest with you, is that it just wasn't performing. So I took, took profits I got out of it, and kind of moved into something else. And it has not been performing as well as we would like. I mean, normally, Google is one of the Magnificent Seven, as they call them. I mean, it's one of the Magnificent Seven, and so it should be the top performer, but it just hasn't been that way. As you can see by the kind of the chart, we do have an upward trending relative strength line. It's at 83. I prefer it would be higher. Above 8, it's pretty good. But it just I don't know. I don't know what's going on with Google. It's just a little bit weak as of late. And let's jump over. Let's see. I'm looking at the GOOGL. This is the Class A shares of Google. Let's put in there. Look at that. Okay. Well, this might be a good place to buy it. It come all the way down. It got support right at the. It got support right at the 50-day moving average. So that's really really good. This is a let's see. I just want to look at this quickly. If we look at it, the 50-day moving average, it's got the 200-day is still the 200-day we're still it's the 200-day. The 50 moved above the 200-day. This is the golden cross. So this is really good. It looks like we're getting support right at the 50. So that's not a bad place to buy necessarily. Let's take a look and see. Okay, the 21-day exponential moving average, I just want to look at this, is at 120.85 and currently, or 125. So we're definitely within 5% of that 21-day exponential moving average. So this might not be a bad place to buy it. It seems like it's turned the corner, and it's definitely up today. So yeah, I mean, and it's up after hours. So yeah, we could probably start sizing position here. I mean, I think that if you had a if you had a buy stop limit order, and what the buy stop limit order does is it only buys it if it moves above a certain range. If, for instance, you could set that buy stop limit order at maybe 125.60, that would be stop, and then the limit on it would be 125.65 or thereabouts, so that if it opens on Monday, moves above that 125.60, and then between 125.60 and 125.65, it would buy it within that range. So buy stop limit order might work for Google. I mean, Google is a great company. It looks like it's bottomed. Just kind of look at the other things that sort of is happening here. Rating 92, really good. EPS has been a little bit down. RS rating 83. This is a little weak. I'd like to see a better rating, though. Is excellent, A+. So everything looks pretty decent. The industry group rank is 6. So yeah, I mean, I think you could buy that as it moves higher, and hopefully moves higher on Monday. So, where would we want to buy that? We probably want to buy a limit order, and we probably want to buy it at about 125.60. That would be the stop, and then the limit would be 125.65. So hopefully, I'd probably should make a video on buy stop limits. I really like to use them because it doesn't buy it unless it starts to make a move upward. We always want to buy an upward trend, and that's the way you can do it, at least. So kind of an interesting way to go there. Thanks there for that, Sandeep. Really appreciate it. And let's see if we get some. Let's see if we're looking at. Okay, what is? Let's see. What about Alphabet? Well, that is Alphabet. Google is Alphabet. There's two classes of stock. For Alphabet, there's GOOG, which is the Class C shares, and then there's GOOGL, and that's the Class C share. So the advantage of the Class C share is that slight advantage in that it has different voting preferences. So it's sort of technical, but they pretty much trade in tandem, and that's sort of the line of it. All right, let's look at the Tesla technicals here. This is TikTok. So let's look at the technicals on Tesla. Okay. So this is from Tesla. This is Tesla for, I can't see their name exactly on TikTok, but Tesla TSLA. I did buy more Tesla today. It had a great week, and I do think it's moving up. I think that the resistance for Tesla is going to be right at about 313. That's kind of where I think it's going to happen. Up today, it's down a little bit in the after hours, 281.38, up $3.48, about 1.25%. It's doing very, very well. And in terms of group that it's in, well, it's doing good too. Composite rating 98, that means it's the top 2%. That's looking very, very good. EPS rating, 93, they're making lots of money. Relative strength is 95. That puts it in the top 5%. This is typically you want to be buying your stocks. Hopefully they have an R rating of 90 or better. That gives you the best opportunity. It's kind of like Pareto's law. I don't know if you've probably heard of the 80-20 Pareto's law. Basically, you're going to get 80% of your performance, of your price increases, and 20% of your stock. So typically have your relative strength at least 80, 90 is better, and it's really unfair, but you want to be buying those high relative strength stocks. That really helps. The SMR rating is a specialized rating on how the company is. B, well, I kind of agree with accumulate distribution rating. This is if the funds are buying, they're definitely buying it. Here's the thing that's happening. Of course, the QQQ, which is NASDAQ 100, was rebalanced today, and it's getting a little bit less emphasis on some of the big cap techs like Tesla and Nvidia and Apple and Microsoft. So they're going to be less. They're going to be less emphasis because the Magnificent Seven stocks were just taking over everything. So it's going to be a little bit less of that. What I expect is going to happen out of this rebalancing is you're going to see Tesla become more of the QQQ, the Nasdaq 100, because it's moving into the $1 trillion club, and some of the other ones like Apple less because they're about $2 trillion in terms of valuation. That's kind of how I look at it, and I think that definitely is bearing with the way it's been trading. So let's go back over here to Tesla and look at the live chart on that. And this is for if you're in TikTok land, and the rest too, but especially from TikTok. Again, this last week very strong. You'll notice though, real interesting. It's staying right on that 10-day line. So it's just kind of following that 10-day line. And that 10-day line is moving up very, very nicely. Now, we may get a pullback, obviously. That's kind of what's happened when it came out of this base, and this was sort of a kind of a cup with handle, not really a cup with handle. It basically broke out at 207. That was where it started to break out. That's basically right. That's right. Basically, sort of right here. See 207. This sort of where it broke out, and then as it moved up, it kind of got a little ahead of itself, moved up to this 276, and then broke lower, and then it tested the 20-day exponential moving average, came up to the 10-day line, and then it gapped up and pulled back to the 10. It's starting to follow that 10-day line right now. 10-day line is at 274.57, and currently it's up about 1.2 per day, 281.38. So I definitely think that you could make a case to buy some more shares here. What you have to be careful with, you don't want to buy it any more than 5% above this 21-day exponential moving average. Currently, that's at 261.91. So if we multiply that, by 1.5, that's going to give the upper band of where you want to be. So definitely within the range of where you can buy, but you don't really want to let it go too much higher if you want to add or start a position in Tesla. Definitely think it's going higher based on kind of the action that I'm seeing. So, you never can say for sure exactly, but that's kind of the take that I have on it. Anyways, all right. Let's go to. Thank you very much. Let's look at STZ. All right, STZ. Get that quick. Constellation brands, of course. Now, Constellation, with the trouble with InBev has been having the Bud Light situation. Constellation Brands now has the number one beer in America, and of course that's interesting because it's Modelo, which is actually a Mexican beer, but it's number one in the U.S. and it's been doing really well. They've had Modelo for a while. I don't really like it all much. I don't drink that. I like a kind of a local Texas better myself, but so it's doing very, very well. It's number two in the group, and the group. And let's see how well. Yeah, it's a laggard. It's 118. Not necessarily the greatest group. It does look like it's moving alcoholic beverages. And of course, Constellation Brands has a lot more than just beer. I mean, they're much bigger in the wines and spirits area. So really more of a wine and spirit play rather than a play on beer so much. InBev, of course, that's the Belgian company that got Anheuser-Busch, and of course the one have Bud Light, and I wish they probably didn't have Bud Light right now. Sales are off. They're continuing to drop for Bud Light. I think now something like 25%, and that's pretty amazing considering that it's essentially, it's the number one. It was the number one selling beer in America for like years, and now can't give it away. It shows you how things change so quickly. Just depend on, it's a very fickle market. So this is let's look at the chart for Constellation. We're coming out of this nice cup. I probably wouldn't be buying in here. I'd probably wait until we were at about 259. That would be completing the cup. So, I mean, yes, you potentially could buy it here. And we definitely have the 50-day moving above that. We have the, let's see. See if I get that right. We have the 50-day moving average. Unfortunately, doesn't look like it's very well positioned. Let's see if I can. Let me. There. Okay, there we go. So the 50-day has moved above the 200-day. That's good. And we're close to the 21. But you know what? I would still wait on this one until we got up basically to the higher highs. That's really when I want to start buying it. It does look like it's getting some traction, and we possibly could start a position here. We could start a position here. Let's see where that 21-day is. 248, and it's 253. So yeah, I mean, technically we could be buying here. I'd like to see it move and hold above the higher high. That's 259.40. That's kind of like where I would like to see it go. So that would be my preference. Would be to have it go above there. So the reason is if it was an hotter category, it was like in tech. If it was, one of the top 10 areas of the market, I would say, yeah, that'd be a good place. But it's 118 out of a total number of 197 different sectors of the economy. So I wouldn't wait. I want to see it. I'll probably watch this one. You want to watch closely, but I think it needs to go a little bit higher. Just my opinion on that. All right, United Health. The health insurers have not been doing as well lately as you would think. I mean, it's. But let's look at United Health. UNH, United Health. Let's just for that. And jump on over. All right. And this, by the way, this comes from the Business Daily, which I highly recommend. Interestingly, we were in this downward trend, and then boom, this must have been earnings. Yeah, look at that. It just jumped up tremendously. Interesting. What's going on? What's going on here? Let's go over to the live chart and see. I'm not trading UNH, but it definitely looks pretty good. Well, I don't like this bounce here. I mean, we definitely had it was in this downward trend. We're trading below that 200 moving average. I don't like that. That's this red line here. We're below the 50-day, came all the way down, and then it bounced up to the back to the 50. So, and the 21 day moving average is below the 50. Not looking good here. I would be higher here. I just wouldn't be. This looks like, I don't know. This looks like a short cover to me. I don't know why it's moving lower like this, but it definitely is. And let's see if we can get some more information here. I want to look at the intraday chart on it, just to kind of see. This is going to give us a little bit better look-see at UNH. It takes a second for it to retrieve data here. Yeah, there we go. So yeah, see, this is in a downward trend like this. We're below the 200-day moving average, just a little bit coloring on the lines here. So you don't really want to buy anything below that 200-day line. This is not a good chart. We're in this trend. We come all the way down here to 450. Obviously, somebody's carrying their shorts, so they're buying back. It's moved above up to the 50-day moving average. So it basically is holding 50-day. You know what? This is kind of looking to me like a potential short. Really, I mean, it's looking like a potential short because the 50-day is kind of where you would want to short it. So this kind of, interestingly enough, is looking to me like this could end up being short. I want to look at the intraday chart. Yeah, look at that. It gaps up right out of the box. There's just a lot of buying right at the beginning of the day. This looks like a short cover to me. Comes all the way down to 447, then boom, all the way up. Typically, if something's in a downward trend and you have these pop-ups like this, these gap ups, that is a short cover. That's kind of what's going on here. And it looks like it's settled right at about 480. But, this might be a potentially good short. So that would be very interesting if that would indeed the case. So let's go over to our charts here and see if that's going to give us some opportunities for a short, for a for a potential for a short. That would be very interesting. I'll look at this a little more this weekend. But yeah, it's looking definitely like that. I mean, we have this big sell off here. Looks like probably on earnings. Big sell off, and then recovery, and then again, it then pulls back up to the 50-day moving average. So that's something potentially is just short because we had this break here that happened basically last week. It just gapped down. I think that was on earnings. I don't have the earnings up, but I think that was gap down on earnings, and then it went back up to the 50-day line. This may be a good short. So what I'm gonna do here is I'm gonna look at this potentially for a short UNH. Thank you for bringing that to my attention because I always like shorts. Now here's the thing about shorts. When you have short, now I did a last short I did on Las Vegas Sands, and that one turned out pretty well for me. Typically happens you want to short and then when it pulls down, if it gaps down, that's when you want to close it. You want to close it as fast as you can. But that is a good profit opportunity. So UNH looks like it might be a potential short. All right. Thank you for this. All right. ASO. Let's take a look at ASO here. Interesting chart. Academy split out. This was a terrific stock. Just really a short time ago, this was really good. And, it just sort of has been struggling as of late. We moved all the way up here. Basically in the first week of April, we broke. We came down. We're trading below the 200-day moving average. And you look at this is the 50-day line. It's starting to move below, unfortunately, that 200-day line. That's not a very good thing. This is probably going to head lower. Relative strength 67. We don't want to set the stock that we're going long on. And not a really good place to short it, though. I'd rather have it collapse and come back up to the 50-day line. So not a good place to short it, but definitely not a stock that we want to be buying long. So, this is not a good place to own this stock long. This does not look like a good chart. This is a weak chart, and I just don't think it's really good. Let's go to the week. I want to kind of like it. Yeah, see, we were doing so great up here, and then we broke. Now we're below that 200-day line. Struggling to get back to the 200-day line, but it doesn't. It might come out of this base, but it might not. So 67 relative strength. I would be really careful with this one. I'd be careful owning this one really at this level. Let's take a look at ASO. Just want to look at various things, see how earnings are, that kind of thing. Okay, so ASO, American Sport Academy Sport Numbers. It's just positive from the 8. That's not really that great. Earnings per 90. That's the relative strength. This is the problem right here that I see. 67 relative strength. I don't want to be trading stock. I want to be trading stocks at 80 or better. This doesn't look that good to me. Group relative strength B minus. S C. That's not good either. And distribution rating. Basically, are the fund buying it? B minus. Well, some are buying it, but just not enough of them are buying it. So 90 out of 197 in terms of the group rank. Not the greatest. Earnings are basically on the September 7th. That's when so we got a lot of time there. Earnings per share last quarter were down. Yeah, that's the reason. 0.24 down, so just not looking good. Yeah, this is a sell. I would be selling this one if I owned it. You want to cut your losses on this one. Probably this is going lower. That's just my guess. But yeah, I think this is the price change. It's up, almost 15 weeks, but and it's up on the year 8%. I think there's better. I think better guys out there. I think take a look at TJX. This was leader about a week ago in the. I want to look at T. Yeah. Let's compare this to other stocks in the retail group. You can definitely do well in the retail group, but it's a little bit tricky. All right, so let's kind of how it comes in this group. All right, in this group, we're looking at Dex Sporting. That's the leader. That's how we build a bear workshop. I can't get too excited about this group. I just don't care right now. Check. Let me check real quick with see what's going on. Let's check with JX. This is the off-road show. They do Max. They've got they've got a lot of different brands. Let's get that. Cheap. JX. And yeah, well, this is a little bit stronger. This is another sector, not the sporting goods, just the regular off-price retailers. Lululemon number one, of course, and it's okay. Urban Outfitters, Ross Stores, Barnes. So these are the leaders in the retail sector, and the sporting goods sector is also retail. It looks like this. Yeah, I would be out of TDAX. It just doesn't look too strong to me. So yeah, there we go. One of the ones that I've been following. I tried Roku, and I didn't buy it. But let's look at the Roku. Let's look at the Roku chart and see what's happening with Roku and the weekly chart. So take the weekly chart first. This is the thing that a lot of these technology stocks, basically, they kind of broke. They've been in decline for basically over a year. This has been 2022 was one of the worst years for the market in just a very, very long time. And what happened was many of these stocks that pulled way, way down, and that's definitely the case with Roku. Roku basically made its high back here at 500, basically, in about the November, September timeframe, 2021, and then it's been declining ever since. It fought its way back to the 50-day to the 40-week moving average, and now it's finally getting some support. So I'm I think this one has some good characteristics here, and it's starting to make its move. And we're a little bit extended here. We're a little bit above that 200-day moving average, but we're above the 200-day, above the 50-day. I kind of am not excited about this action here, because this is starting to get properly stacked. The 200-day, which is the red line here, um, is below the 50-day. That's good, and it's holding above that. Now you have the 21-day coming up, and the 10-day. So this is properly stacked finally, in terms of its look. Let's look at the action in terms of the volume. A little bit of volume spike there. The question is, can we buy? Keep losing my sound and camera. I don't know what's going on. I think it's the bandwidth. The question is, how close to that 21-day exponential moving average can we get? It's pulled back a little bit. So this might be a good entry point here. If we drew a line here, which I don't have. Let me switch to a different style. Let me look for a better entry for Roku. I'm just gonna jump on over to a different chart. All right. I'm just gonna get some of these indicators here. Make it look cleaner. There we go. So this is the Roku chart. And yeah, this is a cup with handle, 74.20. That's interesting. Let me take a look and see what the exponential moving average is. Put that indicator on. Oops. And go back to the indicators here. Now, I should have had this probably ready for everyone. But basically, and we're going to look at the green line here, relatively close to that line. So that's good. The 21-day exponential moving average is at 67.95. We're currently at 74.02, which means that we're still a little bit extended here. So here's what I would do. I think this is a potential buy. I would wait for it to pull back closer to that 20-day line. That would be a pretty good entry for it. Let's kind of look to see how far away it is. Let's see if I can put that in here. Yeah, there we go. So the question is, how far away are we from that? I think we're so it looks as if, yeah, we're a little bit extended here. So this probably would not be the best entry. We want to get it. This is a little bit too far away from that 21-day line. So basically, we want to buy it within 5% of that. So basically, what we need to do is probably wait for a pullback. And the pullback that we're going to probably need to wait for is going to be more along the lines of 5%. So ideally, if you're going to buy Roku, you got to wait for a pullback. And you got to wait. Okay. You got to wait for it to be basically right about here, a little bit above 70. Is going to be where you want to be. So this is going to be, this is kind of what you got to look, kind of what we got to look for. We want to be buying it. Basically, right now we're a little high at 74.02. We want to buy it up to maybe about 71.40. So you're going to put the line there. That's sort of where we want to buy it because we need to be closer to that 21-day exponential moving average. So that's kind of how to tell us where we've got to be. So definitely is viable. I wouldn't buy it here. A little bit extended. You want to wait till it's about 5% of that 20-day exponential moving average. Currently on Roku, the 21-day exponential moving average is at 67.95. So that's interesting. So definitely that in your watch list. If we get to 67.95 plus about 5%, that's where we can probably buy this pretty successfully. So definitely like it. I want to check a few more things on Roku to see. I don't want to look at the strength of the group. I think it's really pretty good. And on over there. Yeah. Okay. So, essentially we're coming up to that higher high. We don't want to make it a little bit lower with this sort of cup with sort of strange handle. Because this is a high handle, we want to have it move a little bit closer to about 71, 72. Currently we are extended just lightly, not a lot. It's, not a lot, but we are extended at 74. So we want to wait for it to get a little bit lower. Netflix is number one in the group, and of course, that's been a great start. But I think Roku has some real potential. Here's the problem: the composite is a bit of a red flag. I want to kind of look to see how it ranks in this internet media group. I think that's what it's called. It's called 94 composite rating. So that's really, really good. It's number 3, basically IMAX, Cinemark. I don't really like Cinemark because, frankly, they're in the movie business, and the movie business, unfortunately, sort of dying. I think same thing. And then Netflix is number 1, but I think Roku's coming on. If it just pulls back a little bit, I think it could be a really good buy. This is a good opportunity for an uptrend. And the group is 17, so that's definitely good. It's in the top 10% or top 5% really of the market. The relative group A plus, you want to see that. It's got a excellent. The earnings are due on this 19th, so this is a little bit of an issue. Buying close to earnings. It's the 14th today, 5th and 16th weekend, 17th. So it's on Wednesday next week is when the earnings are. So I would be a little bit careful buying this to earnings, but I don't think you should put this on the watch list. I think you should wait for earnings, see the reactions, and buy. But it definitely looks like it's pulling back. I think this could really explode if earnings. I would be a little bit more comfortable if you get closer to that 20-day moving average. That's really where you want to be. If we look at the 21-day line, 21-day line is 67 is 67.95, and so we're a little bit away from that. We're definitely away from that. I think we could, we want to wait until this pulls back maybe to about 71.50 or so. Within that range, that 5 range, above the 21-day line. So that would be kind of the idea for Roku. I think we're coming up to earnings, so that's an issue. We want to be careful not to buy it right before earnings because we could really get whacked that way. But we want it. It's definitely looking good. All right, EPAM. About to join Russell. How does the stock react when added to a major index? Very good question. Typically, when there's a major index that's happening, you usually get a very nice bump. So let's look at that. Let's see what's happening there with EPM. But usually, when a stock is added to an index, it usually is a bump for the stock. And if we look at it, Definitely have the golden cross on it. That's bullish. And we're looking at the weekly chart. Let's go to the daily chart. Relative strength is 82. So indeed, that's looking good. My camera's continuing to cut out. I don't know why that's a problem, but it is. So yeah, it's looking pretty good. I don't know if I would be a buyer of this one, but it is Evolution Petroleum. Um, this might be a good time for this one. So interestingly enough, Evolution Petroleum, I definitely like the fact that it's trading above the 200-day and the 50-day. It's pulling back there, so give us an opportunity, sort of a cup with handle, and definitely look. There's been strength in in some oil service companies, so this might be a good play. All right, that's pretty much it. Didn't get to everything today, but tried to get to as much as I could here. I had a little issue with the internet as always at this time of day. Um, we'll be back on Monday, and please, if you already aren't, if you aren't already a member of uh, of Dallas Trading Floor, just super easy. Just jump on over and smash that like button. Smash the like button, and also if you could, definitely, um, definitely do that. And let's see, put that up here. um, and also, so smash the like button. Definitely appreciate that. And also jump on over to www.Dallas Trading Floor to sign up for our email list, and that works really, really good. But smash the like really, really helps us. We'll be back on Monday. Hopefully, my equipment will be working. That's what I'm hoping. Anyways, the sound will be working better than it has today, and we'll be back. So jump over to www.Dallas Trading Floor for the free action trade alerts, and I'll be back on Monday at 5. Thanks, everybody. Happy trading.